The first stock is Aroa Biosurgery. The ASX ticker is ARX. So what does Aroa do, and what's the thesis?
Absolutely. Aroa is a little biotech company that's it's got a very special product that's already been used around the world. So the product is to used in the severe wounds repair sort of markets to help the wound to repair much faster and much more efficiently. And they've got really strong clinical data around the world and demonstrating how well this product is going. Now, it's already been used in over 4 million surgeries around the world, and it's selling in many countries, and it's got license to sell in many, many countries. This company is coming out of New Zealand. It's listed last year, has done incredibly well on the IPO, and then we think the future is enormous for this business. Some of the interesting comparison you can draw from this one with a larger peer, which is called Polynovel. Polynovel has a much larger market cap. However, it doesn't have same amount of clinical study that's proven the product is great compared to Aroa. Aroa being the smaller player at this point, it just still started to getting interest out of the investors because it's a lot of times it takes time for investors to get to know a little company. And the company is now selling in the US, and it has over 30 licenses around the world, and just recently, going to add more of a salespeople to push one of its strong products across different places. And this company has an incredible amount of future, just given the indication it's been demonstrated and the amount of demand it's got for its product. This company's earning also has a reopening play. This sort of type of a word that you often hear from the professional investors at this point is about reopening play. What does that mean? Reopening play means, the company's earnings being impacted by the lockdown of the pandemic. And so hence, once we move past the pandemic, their earnings will jump significantly more as we move towards a normalized world, and this company will have that play to it. Aside from the structural growth that it's already underpinning its earnings, the company will grow, more than 30% for many years to come per annum for many years to come. And our view is that this company actually perhaps won't even be listed on the ASX with its track record and the way it's growing, simply because it's got such a strong suite of products that is very demonstrable of its efficacy for the market it's targeting.